Okay, hi everyone, Daryl here. Yeah, so I decided to change the environment a bit. If not, I'll always be filming in my study room. So actually I got this question. It was emailed to me and somebody asked, how can you tell if a certain property or a stock is cheap? Okay, so a lot of people, what they do, right, is that they see the absolute price. So if they see that maybe like SIA currently, right, is trading at, I think it's about $3 plus, and they think that it's cheap. Or maybe they see that maybe property in maybe Novena is going for maybe like $2,000 per square foot, and then you think that it's cheap. It's cheap in relative to maybe about half a year ago. But in all honesty, right, if you really want to be a proper investor in equities or investor in properties, right, then please use different metrics. That means that there are tools to help you, there are metrics to help you to gauge whether this is cheap or not. Okay, don't look at the actual what I would call like nominal value or nominal price. That means that if the listed price there of SIA is $3.50 or $4, right, then you say, oh, this is cheap. Cheap in relation to maybe a couple of years back, it was trading above $10. Okay, but that is not the correct metrics to use, and for properties as well. So if let's say 2 years ago a certain property was selling for maybe $1 million, and then now currently, right, it's selling for maybe 900,000, and then you say that, oh, this is cheap because it has dropped by 100,000. But maybe about a couple of years ago when it was selling for $1 million, right, you could rent out that property for maybe $3,000. But now when it's at 900,000, right, then you could only rent out the property for, let's say, $1,500. The rent actually dropped by half. So you can see that if you were to use rental yield to calculate and to make an investment decision, then you may not think that this is cheap after all. The same thing for stocks. So if you were to maybe use like earnings to price ratio or any of the other metrics which I did show up in my investing 101 videos, then you would maybe come out with a different figure. Okay, so if you use the different metrics, right, then you realize that maybe the price to earnings ratio, right, is pretty high as compared to a couple of years back, even though the stock is cheaper. So even though the stock is cheaper, it's priced cheaper, but now currently, right, the earnings are not so spectacular. So in actual fact, a certain stock can be lower in price at a later date and yet be more overpriced than maybe a couple years back when the price was higher. Same thing for properties. So try to use different things, different calculations to try to help you in your investment decision. It's not always looking at the price and then seeing how much it has fallen. So you must look at different metrics, different calculations to help you in your investment decision. You can't just see like, oh, price has dropped, so I must buy. Okay, this is the absolute 100% mistake that a lot of people make in the stock market. Okay, and to a lot of people, right, when they go for property investment talks, right, do you realize that the property investment talks never teach you anything about calculating anything like rental yield, return on equity, all this they never teach you. They just teach you how to buy maybe like 20 properties by the time you reach 30 or something like that with little or no money down. All these are all bullshit. Okay, the actual way to do property investment, the actual way to do to invest in stocks, right, is to use proper ratios to calculate. Okay, so that's all from me. I'll see you in the next video, and I'm gonna add this in. Please subscribe and like my video if you find it useful. Okay, so see you guys.